So what I think has happened is Trump started this, and he even said this, that he started at the highest point of where we want to be, right? And obviously knows their negotiation to go lower.
And I don't think
it's going to happen.
And I don't think many people, if any, thought that that's where the tariffs would end up.
Sure. Yeah.
It was just, again, this we don't know.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. This is Matt Walters here with Lee Mackey.
Good morning.
And John Martfeld.
Good morning.
And we've got a lot to talk about, a lot of things going on, as always. But last week was a crazy week. We're going to get into that here in a second. But today is our least favorite day of the year. It is tax day. So April 15th. Hopefully you've not waited until today to try to get everything done. But
yeah.
You got to get your taxes done.
The most
depressing day of the year.
Depressing day of the year, I would say. Yeah. Well, not for everybody, right? I mean, there's people that file, get money back, and it's a great day. But for some people, it's a bad day. I was talking to Isaac out in the hallway there, and Isaac said with Doge going after IRS and all the employees really worried about their jobs, maybe this is the year you just kind of forget to pay. Again, you may not suffer any consequences. I don't recommend that you do that.
Yeah,
I would go ahead and pay.
That's not advice.
Yeah.
Isn't he our new
go ahead
CFP?
And pay.
Just pass the CFP exam.
Yeah. I would say you should go ahead and pay your taxes.
Yeah, tax day. There's always a little anxiety at the beginning of the year, just going into like, oh man, how a tax is going to shake out. So from this point on, for the rest of the year, we can kind of move on. And
we're cruising for another, and then you start worrying about it in January of next year. So we got about 9 months of relaxation.
Yeah, so tax day. So not too much to touch on there, but just talk about how depressing it is.
Yeah, if you're hearing this and you haven't filed your taxes, then you might be too late.
Yeah.
So
yeah,
that's all there is to say on that.
So bigger news though with the market. So last week, really starting the week
April 4th.
Yeah. So the Friday before last week, and then going into last week, just some crazy moves in the market. So John, it started April 4th.
April 4th, the Dow fell 2,231.07 points, or 5.5%, which was the largest point loss in a day ever. Now, percentage-wise, we've had worse.
Yeah.
But point-wise, because the Dow is so high up there, point-wise, it's the worst we've ever had. The S&P declined 322 points, 6%. NASDAQ fell 962 points on that day, 5.8%. And then Russell, which is the small-cap stock, Russell 2000, fell 4.4%. And then so that was Friday, April 4th. Now, Lee, you have data for Monday on, because that was the start of the roller coaster.
Well,
crazy.
Friday was surprising, but not surprising. A lot of traders didn't want to go into a weekend.
Yeah, tariff talk, fears, and all kinds of stuff.
Monday morning, the market was up, but, fairly flat. And then right after lunchtime, this rumor, that
things were going to get fixed.
Things were going to get fixed, or there was going to be a 90-day pause.
Yeah.
And in 15 minutes, the Dow was up 1,400. I mean,
we were in a meeting.
It
went up, and then
it was linear, straight up, vertical.
Yeah.
And then pretty quickly, the White House issued a report that said,
not so fast.
Fake news.
Yeah.
There's no substance to the rumor.
Yeah.
The market ended up down 300 and something, but on Monday, you had a range of almost 2,600 points from the high to the low on intraday trading. So that was Monday. The market was down, or the Dow was down 300. Tuesday, the Dow was down another 300. And then we get the report on Tuesday night, or right after the close, really, on Tuesday night, that there's going to be a 90-day pause. There's going to be just a flat
negotiations
10% tariff across the board.
Yep.
And Katie barred the door. The Dow finished up what percent? 5 or 6%?
Yeah, it was unbelievable
on Wednesday, and then we've kind of just had a little melt up since then. So
yeah, it's been pretty fun. I would say here's the kind of the point of the story. less than a month ago, we had all-time highs on everything. Yeah, it was about sometime in early or late February. Maybe it was more than a little bit more.
It was in early February.
Yeah, so we had all-time highs on historic all-time highs. So the Dow was over 45,000 points. We fell to 37,000 points last week. We are now going back above. We're above 40,000 today. The market opened up, so we're pushing 41,000. But it's amazing. It went from 45, 37. Now we're going to come back to 41, which is the midway point between 45 and 37. All within a 2-week span of market. Well, 45, we were down a little bit, but you get my point. This is a wildly moving with when you have a president comes in and does a 180-degree move on how we run things, which is what's happened, for better or worse, right? When you have that type of change, it's going to create fear. It's the volatility's there. And then you go after countries and so on. And whether you like the tariffs or not, whether you think they're fair or not, whatever, and there's opinions on both sides. And, I kind of lean on the fact I'm kind of glad he's being tough on it. But either way, it's an opinion. We don't know the result until this all shakes out. But that has kind of created all this.
And let's briefly talk about Wednesday, or the decision to remove the
massive
mass tariffs. It probably had less to do with, we have 75 countries coming into the negotiating table, as much as it had to do with what happened Tuesday evening. Was the 10-year yield, our yields spiked because China, Japan, they were dumping our debt.
Yeah.
And reports have now come out a week later that genuinely spooked the White House.
Yeah.
In that all of a sudden you've got two of the largest debt holders saying, you know what, basically we don't have full faith in the U.S. financial system, so we're dumping debt. Well, when you dump the debt, yield spike, which raises the cost of borrowing for all Americans.
Yes. However, let's make a side argument. When yield spikes, we are still the best country in the world. Others will then come in and buy at that higher yield, which kind of now China being the biggest owner of our debt, which is kind of scary, right?
I don't think that's true. I think Japan owns more.
Oh, Japan higher? I know China had $900 billion of our $2 trillion.
But
I think it's I saw something today. I thought that said something that I think China had 760.
Well, I think they sold some. They were at $900 billion. But anyway,
so now Japan technically owns.
And Japan is working with us, right? They're the first country that's kind of come to the table and said,
yes.
Let's get something started.
But my point is, I think this was less about the tariffs are winning versus we had a little bit of a situation on our hands that we needed to get somewhat, we needed to erase some fears on the global scene, and this was a way to do it, and it certainly has.
Hey, on April 9th, just to give you some context here, April 9th, Wednesday, that the Dow was up 7.87%. The NASDAQ was up 12.16% on 1 day of trading. The S&P itself was up 9.52%. That was an amazing day.
We had a year's worth of return
in one
day.
Stinking day. Which goes back to Matt has always harped on this, and he's exactly right, but harped on, you cannot get emotional in market. And I've said that too. You can't get emotional in market. You have to stay the course. You can't let emotion control how you invest. Just think if you had dropped out of the market on Tuesday because you saw 3 straight days, you had a massive point loss, then Monday and Tuesday were down, you would have missed a 12.16% NASDAQ return on Wednesday had you been out, right? So that's the point of you cannot miss those types of days because of fear of what's going on, and that we don't know when things are going to turn around or how these tariffs are going to work out, and there's a lot of uncertainty, but you can't miss out on those days.
The S&P is up 4,800 54 600. The S&P is up 12% in the last week. I mean, that's
what is it year?
I would have a stroke if I looked at your screen all the time.
I know
it's like flashing stuff.
Yeah.
So I've been trying to. Sorry, I've been quiet. Maybe that's to everyone's benefit.
Welcome back to the podcast, Matt Walters.
Well, I was trying to build a line graph real quick with this. I had all this Excel data. So I was going back to like
That looks like my
college.
EKG reading
Yeah.
last Wednesday.
But if you go look at this is the AAII sentiment survey, so the American Association of Individual Investors, and I was pulling down the most recent data and trying to build a quick little chart with it. So if you look at the sentiment where we're at currently, which we'll get into here in a minute, what sentiment means and what it, how some people use that and look at it, but sentiment, there are more people bearish now. We're almost at like historical levels. I mean, there's only been in the last 20 years, there's only been a couple times where more people have been bearish than they currently are. Currently, based on the data, I think it said 58%, just under 60% of investors are bearish, which oftentimes they say is, kind of the contrarian indicator, right?
When it's time to go in.
When it's time to, if you have that many people bearish, it's actually a very bullish, signal. Yeah. But we saw these levels back in 22 or close to these levels, and then before that, the last time we had this many people that were bearish was during the Great Financial Crisis.
And what happened in both of those times? The markets soared from those times. From from 22 we had a bad year. 23 the market recovered just unbelievably well.
Well, and the thing to keep in mind is sentiment doesn't hit these levels at the beginning of the market sell-off. So if you go back and look at the Great Financial Crisis, you go back and look at 22, it was in the middle to back half of where the market was at the sell-off before sentiment hit these levels. And so, unfortunately, individual investors aren't, predicting about what's about to happen. They're usually reacting to what just happened.
Emotion.
The market is a leading indicator. Consumer sentiment is a lagging.
So I could have saved myself a bunch of time because I clicked on the second tab and the chart was already made. But on the flip side, in terms of bullish, I mean, the opposite is true. Just not a whole lot of people are super positive on the markets right now. And I've always viewed that, and I'm not alone, a lot of people view that as like, that's good. The fear in the market has reached, again, not that it couldn't get worse, but historically speaking, the fear in the market has reached a high point. And so, it's a great time to start looking for opportunities. And
we were talking about this before we started the show. It's wonderful about our clients here and so on is that we haven't had a lot of fear calls. Like I've been in this business 25 years, been through a lot of bad markets, and the calls usually are rampant when you have these kind of market volatility. And I think it goes back to the fact that we are kind of doing a little bit different. It's diversification, proper diversification, know your number, do your retirement planning, all that stuff leads to less fear when stuff like this happens.
Sure.
Right. And so I think that's the kind of what I've learned from this particular, most recent downturn is just, hey, when you're doing the right things, your clients in the right spots, and you're not fully taking exposure to this market, because very few of our clients are fully exposed to this wild ride because we have diversification and we preach that, it doesn't bother you as much. And the other side to that, the unknown, I was saying about Trump's unknown stuff he's doing, again, it's a 180 degree from what we had previous from President Biden. And so that is just going to create the unknown, and the unknown creates fear because it's unknown, right? We can't predict what's going to happen next. And so it creates a lot of anxiety, which goes back to the fear index or the people's, and I kind of look at that. Now, I'll go back on the flip side of that. The Kennedy family, right? Very rich, very, very wealthy, JFK's dad. If you want to read a really cool story, read about JFK's dad before the Great Depression and why the Kennedys have so much wealth and so much money. And it goes back to how he went against the population in 1929 and got himself completely out of the Great Depression and used his money and then bought in at great opportunities because it was kind of like, and if you read the story, it's pretty cool, but it's basically a shoeshine boy told him that stocks to buy, and he thought, well, if a shoeshine boy on the street knows what stocks to buy, it's time for me to get out, right? Going against the public perception. That's kind of now when the public starts thinking bad, it's probably a good time to think everything's going to be okay.
That's interesting.
Yeah. So sentiment is in a bad spot, but that could mean, I mean, just an example. I mean, going back, looking at the numbers, just in November, right? Bearish sentiment, it was at 30 in the 30s, low 30s. Now we're, 60 in terms of percent of people.
And what was the difference
bearish.
between November and now? November, President Trump got elected, and all the things he said he was going to do during the election cycle, he's doing. It's just those things are creating some problems.
Sure.
So it doesn't mean that it's not what we thought was going to happen. It's just what's happening is maybe everybody thought it was just going to be rosy right from the start.
Yeah.
Which that's just not how it's going to be when you do the things he's doing. And the hope is that what he's doing is going to be long-term great, and that's the hope. And the fear is that it's not, right? And that's why there's more fear now, because the now is that it's not.
Correct.
So,
what was the last topic we were going to talk about? Sorry,
well, I was going to tell you guys something I thought was pretty funny. If anybody's watched the show Seinfeld, there's a great episode about the low flow shower heads that were put in the apartment building for Jerry and all those guys, and their hair was just kind of way down because they couldn't get any water pressure. And I saw today, I thought that was so funny that President Trump has reversed the low flow shower head mandate. And I don't know who's doing that, because in Arkansas, we have perfect pressure. So I'm not sure where this is, like if it's New York, California, wherever, but he's reversed it. So now we do not have any low flow problems for anybody that's taking a shower. So make showers great again is the theme of today. And I thought that was a kind of a funny side story.
This is with someone who currently doesn't have hot water. This is kind of a touchy subject.
Okay, so the this was the shower head rule that was oh my gosh. Our podcast has sunk to all new levels. The Obama-Biden war on water pressure. The order directs the Secretary of Energy to immediately rescind the overly complicated federal rule that redefined showerhead under the previous administrations. Anyway, so
I just think that's interesting. It's just
I can't
funny.
believe we're talking about.
Yeah.
But
That's lighthearted, but it's good. We need lighthearted stories versus, all the stories we continually get.
the next time I take a shower and I get a bruise,
Yeah.
I'll be like, okay, maybe that wasn't so bad.
Rory won the Masters, if you guys want to say anything about that. I mean, that was the biggest tournament of the year in golf.
What was the Masters?
That's that green jacket tournament.
On a lighter note, you know what's kind of crazy about golf and NASCAR? The two things they have in common is that their two biggest events are at the very beginning of their season. The Daytona 500 is the first NASCAR race, and the Masters is the very first major in the season. And I think that's weird.
I think NFL should do it. We should have the Super Bowl
The
very
Super
first
Bowl
game.
week 1, and then we just play the rest of the season. That's kind of funny.
Yeah.
The World Series will be in next week.
Right, next week.
It was a good weekend for sports.
The value we're providing our listeners has hit historical lows. I'm bearish on this podcast right now.
The sentiment.
Yeah. No, there's just a lot going. There's a lot going on in the market. Last week I was out of town at a conference, and
Thanks for leaving us.
Hope
you had fun.
It was crazy. It was crazy. Like being out of the office and just and keeping up with what was going on and staying in touch with our office back here, and it was just a crazy week.
I'll kind of wrap this up by saying, we've said it so many times. The markets don't mind bad news. They cannot stand uncertainty.
Yeah.
We've put a Band-Aid on it. The thing that worries me a little bit is 85 days from now.
Yeah, if it's still there.
Then we're doing this all again.
Oh, yeah.
But then Trump has the power to literally come out and say another 90 days.
I have a sneaky suspicion that there's going to be a lot of deals done. Okay, so what I think has happened is Trump started this, and he even said this, that he started at the highest point of where we want to be, right? And obviously knows their negotiation to go lower.
And I don't think
it's going to happen.
And I don't think many people, if any, thought that that's where the tariffs would end up.
Sure. Yeah.
It was just, again, this we don't know.
Yeah.
We still don't know.
No. Yeah.
We've somehow kicked the can down the road.
Yeah.
The other thing that's completely being overlooked is we're beginning week 2 of earnings. Financials are reporting.
Yep.
So far, the financials have reported good numbers, primarily the investment banks with strong trading. And so we'll see. No one is going to give accurate guidance.
Yeah.
And that's the part that's going to be somewhat concerning is, most of these companies, their guidance is going to be We don't know.
Well, as a consumer, if you're watching any of the channels, right, the news channels, right, or business channels, and you're watching all these experts come on from every big firm out there, right, they're all revising their 2025 predictions of where the market's going to be. And I guess my point, like, if you look at that in December and you say, oh, they think the S&P is going to be here, oh, it's going to be a great year, and then in April they change their mind, and then in July they change their mind. And I guess my point, even with the most greatest data and all the greatest minds, we have no idea, right? It does come down to corporate profits, in my opinion. Corporate profits are the real thing that drives the market. Obviously, tariffs and all kinds of government policy can affect corporate profits for sure. And that's, that they tie in together. But for the most part, we overreact, I think, on what the Fed says, what the tariff talk right now is over fear, because it is going to get worked out, in my opinion. I mean, I hope that's the case. It is all going to get worked out, but we overemphasize those things, and it all comes down to, at the end of the day, profits and loss for companies on the street.
Well,
and
it's a good time it's a good reminder to say too that like the market trades ahead of earnings and GDP and all that. Like the market, I think I was reading something the other day. Don't quote me on this, but historically the market is bottomed 9 months before earnings have bottomed out, right? And so you can actually see the market grinding up as even if
earnings come down,
even as earnings are still continuing to come down. It's like, well, that doesn't make sense. It's like, because the market already priced this in and hit bottom. And so even if the next quarter or two or few quarters we see some, that doesn't necessarily mean it could mean the market goes lower, but doesn't necessarily mean the market's going to go lower. The market's likely going to have already hit a bottom.
Recession. The word is we could already be in a recession, whatever.
Yeah.
Well, April 30th, we'll find out first quarter GDP. We'll know if that is a negative quarter, but it'd be the first quarter negative in a row, if that makes sense. So you'd have to have another one to technically call it a recession. But typically, if you go back and look at all recessions in our market history, the market turns the corner. It hits the bottom well before the recession ends, right? It's usually in the beginning, to your point.
Right.
It's always forward-looking. So
we've got sentiment at high level. I mean, bearish
Negativity,
sentiment at high levels. We've seen a pullback in the market. We've got earnings coming in. So the next 3 to 6 months will definitely be really interesting. I don't expect volatility to go away. I think we're going to still see some swings, and then we'll see what the Trump administration can get done in the next 90 days, related to tariff negotiations and all of that. So any parting?
Last thought. PE ratios, by the way, on that big market downturn, actually got kind of in line with historical numbers.
Yeah, I almost mentioned that.
It's pretty cool that because we were overpriced, right? And then we had that massive quick sell-off, and all of a sudden we're kind of fair valued. It's kind of amazing. So
for 37 minutes.
I mean, exactly. Exactly.
I mean, if you look at the biggest names in the market, let me see if I can pull these up real quick. So if I'm just pulling up a couple of the bigger names. So if you look at, from how much they're down from their all-time highs, I mean, you've got some material pullbacks on some of these names. That are down 20, 30, 40% from their all-time highs. And the market as a whole has held up pretty well.
Yeah.
So just another crazy stat on Monday the 7th, day. The VIX, the measurement of volatility, the range, 36 to 52.
Unreal.
The VIX hit 52 on Monday, a week ago, and we're at just under 29 today.
To put that in perspective, the VIX, if you follow that, it's on. If you look at any financial channel, it's usually on the screen as they're rolling across. It shows the Dow and the S&P and the Nasdaq, and the VIX is usually on there. The VIX has hovered around 10 to 12 over the last 6 months.
It's been
to
in
a
the
year.
teens.
Yeah, it's been in the teens, low teens, and now, and we talk about 52. That's a pretty massive. Yeah, that's volatility was at its peak.
Yeah, if you look at NVIDIA. Sorry, I know I've been all over the place today, but if you look at NVIDIA, NVIDIA's down 25%, Tesla's down 37%. You've got, Apple 20+%. I mean, like some of these names have
and this is current,
seen
right?
material.
That's
Yeah.
current. So they actually were much further down because they've actually come back.
Yeah, they've
quite
come
a
back
bit.
some.
Yeah,
Sure.
it's crazy.
So I think as crazy as it's been, I think to summarize all this, the last few weeks, there's still a lot to be positive about and a lot to say, like, okay, the market moves quickly these days. It's always weeks like last week's a good reminder of that. The market moves quickly. But don't panic and react, have a plan, stick to it. And typically the right decision when it comes to these kinds of moves in the markets to sit still and, don't do anything.
Yeah.
We'll see what happens over the next 7 days before next week's podcast. I'm sure it'll be quite eventful. But as always, we appreciate you guys watching and listening. Give us a like, subscribe, send us your feedback, and we'll look forward to seeing you guys next week.
Have a great week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.